What if I told you that you could build a financial life where you don't have to work for money anymore, where your assets work for you year after year, decade after decade? I've spent the last 15 years studying wealth accumulation, and I've discovered something remarkable. The wealthiest people I know don't have one income stream. They have dozens. They own assets. Assets that wake up every morning producing income whether they're sleeping, working, or traveling. Today, I'm sharing with you the exact 21 assets that generate passive income for decades. If you've ever wondered what separates the financially free from the financially stressed, this video is going to change how you think about money. Let's dive in. Now, before we get into the assets themselves, let me clarify something important because I see a lot of confusion about this. Passive income doesn't mean zero effort. That's a myth. What it actually means is income that doesn't require you to trade your time for money on an ongoing basis. You set it up once, and then it generates returns continuously. Think of it like planting an orchard. You spend months preparing the soil, planting trees, and initial care. But once those trees are established, they produce fruit for decades with minimal maintenance. That's the power of passive income assets. Here's why this matters in real financial life. Most people have one income source, their job. And when your income is tied to your time, you have a fundamental limit. There are only so many hours in a day, but assets don't have that constraint. A dividend-paying stock generates the same return whether you work today or not. A rental property produces rent whether you're checking emails or on vacation. Over the next 10 to 12 minutes, you're going to learn about 21 different asset classes that successful investors use to build wealth that lasts. Some require significant capital up front. Others you can start with as little as $100. Some are passive from day one. Others require work initially but become truly passive after you've built them. By the end of this video, you'll understand which assets fit your financial situation, your risk tolerance, and your goals. You'll also understand the psychology of wealth, why most people don't build passive income, and what separates those who do. Let's start. Number 1. Dividend-paying stocks and index funds. I want to start here because this is where most serious investors begin their passive income journey. Dividend-paying stocks are corporations that share their profits with shareholders quarterly or annually. You own a piece of a company, and that company sends you a check or deposits it directly to your account. Here's what makes this so powerful. Dividends are real income, generated by real business operations. When you buy a stock that yields 3 to 5% annually, you're making money on the money you've already invested. And because of compounding, this grows exponentially over time. Let me give you real numbers. Imagine you invest $30,000 in a diversified portfolio of dividend stocks yielding 4% annually. That's $1,200 per year in passive income. That doesn't sound like much until you realize that money didn't require you to work a single hour for it. It simply came because you owned assets. But here's what most people miss. Dividend stocks also appreciate in value, so you're getting income plus growth. Over 20 years, that $30,000 could grow to over $60,000 in principal, while simultaneously generating over $50,000 in cumulative dividends. The beauty of dividend index funds is that you get diversification immediately. Instead of picking individual stocks and researching companies, you own hundreds of companies at once. An ETF tracking the S&P 500 gives you exposure to 500 of the largest American companies, all generating dividends, all growing together. Now, I want to address the risk here because it's important. Stock prices fluctuate. In down markets, your portfolio might drop 30 or 40%. But here's what I've learned after 15 years. If you're investing in dividend-paying companies with strong fundamentals, those prices recover. And while you're waiting for recovery, you're still collecting dividends. The lesson: dividend stocks are perfect for long-term wealth building, but they require patience and emotional discipline. Number 2, rental properties and real estate income. Real estate has created more millionaires than any other asset class in history. Why? Because it combines multiple income streams and leverage in a way that almost nothing else can. When you own rental property, you're making money 5 different ways simultaneously. First, you're collecting rent, which is immediate cash flow. Second, the property is appreciating in value over time. Third, your tenants are paying down your mortgage for you. Fourth, you get tax deductions for maintenance, repairs, depreciation, and interest. Fifth, you can refinance and pull out equity if you need to. This is why real estate is so powerful. It's not just income, it's wealth multiplication. Let me paint a realistic scenario. You purchase a 2-bedroom rental property for $250,000. You put down $50,000 and finance $200,000 at 5% interest. Your mortgage payment is $1,100 monthly. Your rent, $1,800. That's $700 monthly positive cash flow before you account for taxes and maintenance. After accounting for 30% of rent going to property taxes, maintenance, insurance, and vacancies, you're left with about $400 monthly net income. That's $4,800 annually on a $50,000 investment. That's a 9.6% return, which is exceptional. But wait, there's more. Your tenants are paying down your mortgage principal. Each month, roughly $350 of your mortgage payment goes to principal equity. After 30 years, that property has appreciated perhaps 200% in value. You've received hundreds of thousands in rent. Your mortgage is paid off. You now have an asset generating $1,500 in monthly income with minimal expenses. Real estate isn't passive initially. You have to find properties, manage tenants, handle maintenance issues. But once you've built systems and hired property managers, it becomes increasingly passive. Number 3, bonds and fixed income securities. Bonds are the overlooked asset class. Everyone talks about stocks, but bonds are where conservative investors and retirees build stable income. When you buy a bond, you're essentially making a loan to a government or corporation. They promise to pay you interest regularly, typically semi-annually or quarterly, and return your principal at maturity. It's predictable, it's stable, it's not exciting, but it works. Here's the practical application. If you have $100,000 and you buy bonds yielding 3%, you get $3,000 annually in interest income. That money arrives predictably. You don't have to worry about market crashes decimating your portfolio. Corporate bonds typically yield higher rates than government bonds because they carry more risk. Treasury bonds are safer, but yield less. The key is matching your bond allocation to your risk tolerance and income needs. I know investors who've built substantial passive income using bond ladders, purchasing bonds that mature at different intervals, ensuring continuous cash flow over decades. A 70-year-old investor might structure bonds to mature every 2 years, ensuring regular liquidity while living off the interest income. The practical wisdom: bonds won't make you rich quickly, but they're reliable, predictable, and essential for wealth preservation alongside growth assets. Number 4, peer-to-peer lending and alternative investments. Now we're getting into less traditional territory, but these platforms have created genuine income opportunities for everyday investors. Peer-to-peer lending platforms connect borrowers directly with lenders. You loan money to individuals or small businesses, they repay with interest, and you pocket the spread. Returns typically range from 5 to 9% depending on risk level. Here's how it works practically. You invest $5,000 across dozens of loans. Some borrowers default, which is expected and priced into your returns. But across the entire portfolio, you're averaging 6 or 7% annual returns. That's $300 to $350 annually on that $5,000 investment. The advantage is liquidity compared to real estate and flexibility compared to stocks. The disadvantage is that you're taking on credit risk. You can lose principal. I recommend treating peer-to-peer lending as a small portion of a diversified portfolio, not the foundation. But for investors willing to accept moderate risk, it's a legitimate passive income generator. Number 5, high-yield savings accounts and money market funds. This might seem boring compared to real estate or dividend stocks, but it's important context. When interest rates are elevated, like they have been recently, high-yield savings accounts and money market funds offer returns comparable to bonds with more security and liquidity. A high-yield savings account currently offering 4 to 5% means $100,000 generates $4,000 to $5,000 annually. That's passive income with essentially zero risk. The trade-off: you're not building wealth here, you're preserving it and earning modest returns. But for emergency funds or short-term capital you need accessible, this is perfect. And in today's environment, that return is nothing to dismiss. Number 6, certificates of deposit, CDs. CDs are simple. You lend money to a bank for a fixed period, 6 months, 1 year, 5 years, and they pay you a guaranteed interest rate. Currently, 5-year CDs are yielding 4 to 5%. Why would someone choose this over a savings account? Certainty. You know exactly what you'll earn. There's no market risk. Your money is FDIC insured up to $250,000. The strategy some investors use: they create a CD ladder. They purchase CDs maturing every year for 10 years. As each CD matures, they reinvest in a new 10-year CD. This ensures steady income and provides regular opportunities to capture new interest rates as they change. Number 7, royalties from intellectual property. Here's where the passive income gets interesting. If you've created something, a song, a book, a course, software, You can generate royalties indefinitely. An author friend of mine published a niche personal finance book in 2018. She spent about 60 hours writing it. Today, 8 years later, that book generates approximately $8,000 annually in royalties. She didn't work a single hour last year to earn that income. Music royalties work similarly. A composer creates a piece of music once, and it generates royalties every time someone streams it, uses it in a video, or includes it in a film. Some artists I know generate $5,000 to $15,000 monthly in streaming royalties. The key insight: royalties require upfront creative work, but once established, they generate income indefinitely. You're leveraging your intellectual capital rather than your time. Number 8. Affiliate marketing and commission income. If you have an audience, whether it's a blog, podcast, or YouTube channel, you can generate commission income by recommending products and services you genuinely believe in. I know creators earning $15,000 to $50,000 monthly through affiliate commissions. They recommend software, investment platforms, products they actually use. When their audience purchases through their links, they earn a percentage. The barrier to entry is building an audience, which requires consistent content creation. But once you have that audience, recommending quality products becomes a form of passive income. The ethical principle: only recommend things you genuinely endorse. Your credibility is your most valuable asset. Number 9. Dropshipping and e-commerce. With dropshipping, you establish an online store selling products without holding inventory. A supplier handles production and shipping. You handle marketing and customer service initially, then automate or outsource much of it. If you create a successful store generating $10,000 monthly in sales, and you maintain a 30% profit margin, that's $3,000 monthly in income. If you've systematized the operation, that income comes with minimal ongoing effort. The challenge: there's a significant learning curve and competition is fierce. Many dropshipping businesses fail, but those that succeed can generate substantial passive income. Number 10. Vending machines and automated retail. This is tangible, straightforward business. You purchase a vending machine, place it in a high-traffic location, and collect cash and sales data regularly. A well-placed vending machine generating $1,000 monthly in sales with a 45% profit margin produces $450 monthly or $5,400 annually. After paying rent to the location owner, a good machine nets $200 to $300 monthly. It's not glamorous, but it's real passive income. Some investors operate dozens of machines across multiple locations. Number 11. Advertising revenue from digital content. If you operate a website, YouTube channel, or blog with significant traffic, you can monetize through advertising platforms like AdSense, YouTube Partner Program, or direct advertising deals. Here's the reality: advertising revenue is modest per viewer. YouTube typically pays between $1 and $10 per thousand views, depending on audience geography and content category. Financial content commands higher rates, $5 to $15 per thousand views, because advertisers pay premium rates for affluent audiences, but with significant traffic, this becomes meaningful income. A channel with 1 million monthly views in the finance niche might generate $5,000 to $15,000 monthly in ad revenue alone. Number 12. Membership communities and subscription income. Creating a membership community or subscription service generates recurring revenue. You create content, community management systems, exclusive resources, and people pay monthly or annually for access. A membership community with 500 members paying $20 monthly generates $100,000 annually. After platform fees and hosting costs, that might be $80,000 to $85,000 net. Genuinely passive once the community is established. Number 13. Storage units and self-storage. Real estate. Self-storage real estate operates similarly to rental properties but with lower operational overhead. You purchase or finance storage facilities, rent units to customers, and collect monthly fees. A storage facility with 100 units averaging 70% occupancy at $150 per unit monthly generates approximately $105,000 annually. After operating costs, that might net $30,000 to $40,000 per year. Storage is relatively passive compared to residential rentals because tenants don't require maintenance of the space. You're just providing secure, climate-controlled storage. Number 14. Laundromat operations. Laundromats are another interesting automated income business. You purchase machines, place them in a facility, and customers deposit coins or use cards. Revenue splits between the laundromat owner and coin collectors. A well-placed laundromat can generate $5,000 to $10,000 monthly in revenue with relatively low operational overhead. Number 15. Lending club investments. Beyond peer-to-peer platforms, traditional lending clubs and credit unions offer dividend income. Some credit unions pay 3 to 5% on savings accounts and certificates, particularly if you maintain minimum balances. Number 16. Master Limited Partnerships, MLPS. MLPS are partnership structures that typically pay high yields, often in the 6 to 9% range. They're commonly used in energy infrastructure, telecommunications, and real estate. The advantage is high income generation. The disadvantage is tax complexity. You'll receive a K-1 form rather than a standard 1099, and you should work with a CPA. Number 17, preferred stocks. Preferred stocks are a hybrid between bonds and common stocks. Companies pay fixed dividends on preferred shares, typically yielding 5 to 7%. They take priority over common stock dividends in bankruptcy situations. An investor with $80,000 in preferred stocks yielding 6% generates $4,800 annually. Number 18, photography stock and digital assets. If you're skilled in photography, graphic design, or digital creation, you can upload work to platforms like Shutterstock, iStock, or Getty Images. Every time someone licenses your work, you earn a royalty. A photographer with a substantial portfolio might generate $200 to $1,000 monthly in ongoing licensing income. Number 19, digital courses and educational content. Creating and selling online courses is a legitimate form of passive income. You develop the course once, upload it to a platform like Udemy or your own website, and it generates sales indefinitely. An average course might generate $500 to $2,000 monthly after the initial creation effort. Number 20, real estate investment trusts, REITs. REITs allow you to invest in real estate without direct ownership. Companies own portfolios of properties and distribute 90% of income to shareholders as dividends. A REIT investment yielding 5% provides that return passively without the management overhead of direct property ownership. Number 21, Dividend, aristocrats, and dividend growth stocks. Finally, dividend aristocrats are corporations that have increased dividends for at least 25 consecutive years. These companies have proven business models, strong cash flows, and management commitment to shareholder returns. Investing in these companies gives you both stability and growing income. A stock yielding 3% today might yield 4 or 5% in 10 years due to dividend increases, while you're also benefiting from capital appreciation. If you're ready to begin, here's how to start this week. Action 1. If you have any investable capital, open a brokerage account and purchase dividend index funds or bonds. Start small if needed. Even $100 matters. The point is to start the habit. Action 2. Research real estate in your market, not necessarily to buy immediately, but to understand prices. Action 3. Cap rates. Identify your unique skill or audience. What could you create? What problem could you solve? This is where digital asset building begins. Action 4. If you have capital, consider your first significant investment. For most people, this is either dividend stocks or real estate. Commit to understanding one deeply before you invest significantly. Action 5. Read or listen to content from experienced investors. This dramatically accelerates your learning curve. Passive income is not a fantasy. It's not something only rich people or lucky people achieve. It's something that ordinary people with discipline and consistency build over time. The 21 assets I've shared today are real. People are generating genuine income from each of them right now. Some of these assets will be wrong for you. That's fine. But likely several of them align perfectly with your situation. The wealthiest people I know aren't working because they have to. They're working because they choose to. Their assets cover their expenses many times over. They have financial freedom, the ability to make decisions based on their values rather than money pressure. That's possible for you. Here's the truth. You're either building assets or spending money. You're either working toward financial independence or moving further from it. There's no neutral. Every dollar you have is either invested in your future or consumed today. Every decision either compounds toward freedom or against it. I know that sounds intense, but after 15 years studying wealth, I've learned that this binary is true. Financial freedom isn't complicated. It's the result of consistent decisions made over decades. The only question is, will you start? Because 5 years from now, you'll wish you started today. That's not a motivational phrase. That's mathematical reality. Every year you wait is a year of lost compound growth. So here's my invitation. Pick one asset class that resonates with you. Start this week, learn from it, make mistakes with it, optimize it, then add another asset class. That's how wealth is built. Not through one perfect decision, but through consistent, repeated decisions toward financial independence. You can do this. If this content was valuable, I'd appreciate it if you subscribe to this channel. I release new content every week on building wealth, passive income, and financial independence. Subscribe so you don't miss it. Drop a comment below. What asset class interests you most? Are you currently building passive income? I read every comment, and I'd love to know what resonates with you. And if you found this specific framework useful, share this video with someone who you think would benefit. Financial education should be accessible, and I appreciate you helping spread that. Thanks for watching. I'll see you in the next one.